Dr. J. You're going to be hearing from Mr. Top Step in a second. Mr. Top Step is called Top Step because the very top ring of that pit, that's where the biggest traders stand. You want to know what they're doing, you got to watch Mr. Top Step.
Hello, this is Danny Riley reporting from the S&P pit from the floor of the CME Group. You know, today was a pretty mixed day. We had a couple of speeches, and then we had several economic releases. The S&P overnight firmed up a little bit. It opened up a couple handles higher, but we had really big volume overnight. I'm not sure what that was due to. A couple of things. There was a rumor floating around that the Japanese wanted to sell over $100 billion worth of bonds to raise money for domestic projects that they have going on. Right now, the bonds were down about 1.5 points, and now they're down about 1 point. As far as the volume here in the S&P is concerned, we're into the rollover. This is not particularly a great time for trading for the locals in the pit. It just kind of makes it a little harder because a lot of traders that normally would be trading the index in the open outcry market or electronically are now focusing on the index spreads themselves. We also have, as we stated yesterday, we also have the DEES expiration coming up this week. The rest of the floor here, you know, we're kind of in a holding pattern here, and this happens quite often when you come into a unemployment figure, which is tomorrow morning. You know, the White House put out a little blurb that maybe the unemployment rate's going to go up. That's got some people a little concerned about kind of where that's coming from based on the story out of Japan today. But the rest of the markets seem pretty subdued. The currencies are mixed. The EC's up, the yen's down. They've got semi-decent volume in the 10-year note options. They set around 50,000, and over in the euro-dollar options, I'm sorry, they've got about 30,000. Right now, the S&Ps are just sitting. They're not doing anything. There's very little flow here, but it's not really that weak. It's kind of like telling us that maybe the markets are going to still try to move up a little higher this afternoon. But you know what? The real deal of this is that we're on a contract high. The S&P is up over 70% on the year right now, and to tell you the truth, we can't advise people to go jumping in buying S&Ps up 70%. It just doesn't make sense. But that's why a lot of people come in shorting it every day, and what they do is when they short it, they put in buy stops, and that feeds on itself. You know, the way program trading works is in the S&P, they offer futures to buy cash. That's a buy program. On the downside, they bid for futures and sell cash as a sell program. When these buy and sell stops enter into the market, what they do is they feed these type of program trades. And that's kind of where we're at. There's not a lot of institutional trade here today. We don't expect there to be, and we're going to be looking for a big push one way or the other tomorrow morning. Now, we want to point out one little trading rule that we're really acute to, and that's that tomorrow morning, if there is huge or oversized volume in the Globex session prior to the 8:30 open, and you see a big gap up or gap down, this is when we think that you have to fade that type of move. So particularly if we have 350 or 400,000 minis tomorrow, the S&P gaps higher into new contract high, we're going to be looking to sell that rally or the first rally above, and vice versa on the downside. If we get big volume and the market opens down, we'll probably be looking to buy the lower open or the first blip below. We're still thinking 1130, 1150 by the end of the year, folks. There's just no selling here, and there's nothing to indicate that anybody really big is sticking out taking profits here. Until that changes, we are where we're at. We're going higher.
Hi guys.